Welcome back to Morning Trade Live. Time now for the chart master. Jenny Horne is going to go through the fundamentals, and Rick Ducat will go through the technicals. Big tech begins to be in focus in earnest next week with a slew of earnings. We will start with Meta. It reports on Tuesday. Jenny, what's the street expecting?
So the street is really expecting, I'd say, still stellar results. Meta has been, of these three names we're looking at today, the best performer, at least on a year-to-date basis. And of course, the year of efficiency seemed to really pay off. It was actually the second best performer, in the S&P 500 last year, just only second to Nvidia, of course. But I think that right now, what we're seeing from a name like Netflix is that the bar being set high is not always a good thing, as Meta has been able to grow its revenue by above 20% on pretty easy comparisons in previous years. So now we've seen the year of efficiency now reduce its overall expenses and drive really robust earnings growth in 2023. Much of this is expected to continue in this year. So anytime we expect trends to continue, then it makes just overall some of the price activity and sensitivity just more, I'd say, dire, because that means that we're pricing things to perfection right now pretty much. But the data does suggest so far that some of their revenue growth should continue to come down meaningfully from recent levels and at least the long term. That being said, the question is whether management's able to maintain its expense discipline, of course, and determine how the company can continue to compound its earnings at a 15% rate now over time. So the Remain is concerned with their metaverse-specific investments, as that overall area of its business continues to actually rise in costs and it's not profitable. So that is a part of their business that's hemorrhaging money. But there is always the thinking that if you're innovative and you're operating into this relatively new world of AI, maybe you have to spend a little to then earn a little. So we'll again have to see how they frame that. I feel like that's something that's always sort of at the tail end of their earnings call, because I think it's intentional that, Diane, they're trying to leave out that part of their business that just continues to be somewhat of a black eye on their overall balance sheet.
They have, but in earnings call, they have said before, I've heard Mark say before, it hasn't gone away, that the metaverse is still there. Mm-hmm. And then we're seeing kind of what they're doing and with regard to the latest on the AI front, especially like I forget which one of their apps I was on where it sent me the AI prompt, which I quickly closed it because I just wasn't ready for all that. But speaking of black eyes, it did have a black eye today in terms of China's crackdown on its presence there in terms of its app store, and Apple saying it had to remove WhatsApp and Threads from the App Store in China. But let's pivot to the chart. I hadn't looked at this one in a while. It's the stock is much higher than when I last looked at it. Rick, what are you seeing in terms of the chart for Meta?
It's been a strong performer during the past year. I mean, for such a large company to be up 135% off the lows, really worth noting there. But we can see the recent term action has been kind of begins here with this gap up here that we had in our last earnings event. Since then, we've formed kind of a rising wedge type shape here with two trend lines in white converging toward each other, but both pointing upward. However, today is a bit of a question mark because you can see we have crossed below our yellow 21-day exponential moving average. We crossed below our white trend line there as well. Now we're back within the boundaries of this blue sloping trend line aiming downward here. You can see as well, there's a bit of a volume node right here, an area of particularly heavy trading according to our volume profile study. That comes in right near like 485 or so. It's a potential congestion area, potentially supportive area here. We're kind of in the thick of it right now. So it'll be interesting to see what happens as we head into the close in this name, if we can hold on to the support, particularly here, this light green line near 482 where we've bottomed out a couple times. That would be a key area to hold as well. RSI, our measure of momentum, trending downward here. We had an accompanying upside breakout along with price, but we are quickly retreating back within the downward sloping trend line in red that we've established there. Now we're also finding ourselves slipping below that 50 midline that separates bullish and bearish momentum here. So things are maybe more geared toward the downside in the short term here. If we were to break through 482, 63-day EMA comes in near 472. That could be a supportive area to watch. To the upside, we got to retake our 21-day EMA, and then the old highs near 531. That's the ultimate point the bulls would want to beat.
All right, Jenny, let's switch gears to another tech stock that we're watching. Microsoft is in focus. It's going to report next week. It reports on Thursday. Talk to us about what analysts are expecting out of Microsoft.
So analysts love this name, frankly, Diane, and I think that speaks for itself when you have right now not a single analyst that is even bearish skewing at all. There are no underperforms, no sells in this name. Of the 62 analysts that roughly cover this name, I think I believe there's 3 at this point hold. So that just goes to show that every analyst right now is either leaning to a buy or a strong buy, which is a pretty solid conviction as we head into their earnings. They are overall expecting about a 1% increase above their previous revenue, would represent about 14.5% year-over-year growth, or that's 14% on a constant currency basis. So some sequential and annual improvement as far as their revenue is expected. But excluding now Activision, the growth rate is expected to be around 11% year-over-year in constant currency, which is currently stemming from the sustained Azure and overall Microsoft 365 strength, they have said. They've highlighted the fact that AI, of course, has been a major focal point for their various Bing search engine, as well as their major investment in OpenAI, which has continued to be pretty lucrative for this company. But I actually think what's interesting also about Microsoft is, relatively speaking, it actually looks quite affordable. It trades at around 37 times its projected 2025 free cash flow, which, given if we see some stabilization from here, that actually makes it pretty attractive as far as like the AI reach, because so many are projecting that the AI market could reach about $1 trillion by 2027. That's just some thinking, but Microsoft stands to obviously benefit from that. Now, I will say that there is a lot of then expectation around Azure specifically. Some analysts are modeling upwards of 28% growth for that segment of their business. We've seen that since lose some market share to AWS. It's been the battle between Microsoft and Amazon as far as their cloud dominance. So I also think there's a high bar set here, because this name is pretty much competing with the best of the best in so many of these hottest markets. AI, cloud, I mean, also video games is now a major part of their business. So they have to be the best of the best. And I have to say, so far from their last several earnings, they have been.
The letter of the day is A, it seems like, especially when we think about Microsoft, artificial intelligence, AI there, and where they are in that space, Azure, and, you know, even you brought into the conversation how it factors into the AWS scenario. But great points on Microsoft and what to watch out for there. But Rick, what are you seeing in terms of the chart for Microsoft?
Another strong chart, perhaps not quite as strong as our last one here, but this has also been a nice move to the upside that we can see. We can draw a channel here between our 2 blue dashed lines here, pretty consistent, pretty longer term here. We topped out near 430.82, and then we saw a bit of consolidation, a bit of kind of sideways movement, and then a decline here during the past couple weeks. However, we've held on to a key point, which is this green line near 398. We bottomed out around that point 3 times here. We're getting close to that area now, though, so this will be another of these important areas to keep an eye on as we progress through this trading day. We're working our way to the downside through our volume node here, near like 405 or so, and we can see as well we've given up our 2 shorter term exponential moving averages, yellow 21-day and orange 63-day. We're trading below both of them. The trajectory of these lines is now shifted from up to down, which is another sign of potential trend rollover here. Now, we haven't seen price collapse in any big way here. So, like I said, it could be just a matter of a bit of consolidation we need to work our way through right now. However, these are warning signs that you shouldn't ignore. We also can see as well, if we look at RSI, momentum has been declining notably here. We can see ever since we dropped below our blue trend line there on price, we've started to fall off here. We're below the 50 midline. We're getting close to the oversold area. That would be a sign of further weakness to come typically. So keep an eye on that 398 area, our green line here. That would be a supportive point. If we were to break downward here, it could be a bit dicey, because the next area, the next key area on our charts that I see at least, is this area near 370 or so. We've got a big volume node. We've got a consolidation area. That could be a place to look for support. To the upside, we want to recapture our moving averages, and then like our last chart, we'd want to take out those old highs near 430.82.
All right, one more big tech name that we want to talk about. Alphabet, parent company of Google. Jenny, I know you're watching that one. It also reports next Thursday, facing a little bit of headwinds today in terms of the stock after some pushback. This according to a Wall Street Journal report from UK regulators overseas that it's not quite done enough yet with regard to the replacements for advertisers and cookies there. But let's talk about the expectations for its earnings. Jenny, you want to tackle that first?
So I will say that that's a really good point, because I do feel like there's actually no other name that's under like more global scrutiny from a regulatory perspective than actually Alphabet. I think Microsoft and Meta give it a pretty good run for its money, but it just feels like it actually weighs on shares of Alphabet a bit more. And I will say that this name actually has the lowest buy rating percentage of the overall analysts that cover it. There's 54, and 44 have buy ratings. So while it is objectively so strong, there are 10 holds, and that's the largest neutral camp of these three names as we head into their first quarter earnings next week. I also think that unfortunately for Alphabet, they have been somewhat in Microsoft's shadow all year, as Microsoft has just been a little bit ahead of the game. So it feels like, as far as Gemini in the launch we saw in February, and a lot of the responses we've actually already gotten to some of their AI offerings have not been super positive. It then puts them in a different position as we head into earnings. So maintaining broad appeal is really key when we see some of these scale advantages, especially, which is the whole strategy in which their search business has been built. We'll also be looking for, of course, any updates on how these large language models are playing into Alphabet, as we do know that Google was saying they were going to offer a subscription or a premium service that would have more AI on their Google search engine, but then you'd have to pay for it, which is a concept that they've never, ever tested. Alphabet has never had to charge for specifically their search engine. They've charged for other various aspects of their business, like Gmail, for example, but never that. So I think that could be interesting, but also how are expenses going to fare as you build out this massive new way of overall doing your business? That's a major concern. And the status of the ad market. I think the ad conversation is also very critical to all three of these companies, but it just feels like it's weighed on Alphabet a little bit more. Are you continuing to see advertising dollars accelerate and recover, or is that an area of your business that is continuing to be disappointing? And then, of course, I do think with the fact that we're modeling about 6.5% still ad revenue growth, and we do expect overall advertising to be around 70% of their total revenue, that then makes this still very much ad-driven conversation. Now, advertising actually dollars have been strong in recent quarters, but it hasn't translated into any amount of stock gain. So that's where I think the street has a little bit of pause, because this company just isn't in the same right now health as the other three. And I know that sounds ridiculous because it still has been a healthy chart, just right now not as loved. But for that reason, valuation is actually a bit of a discount to, say, Microsoft. So you're getting right now Alphabet a bit cheaper, just given the little bit lack of enthusiasm relative to these other two names.
Okay, speaking of charts, Rick, what are you seeing from Alphabet, Google's chart?
Another one that is pretty strong still. You know, it's hard to find too much terribly wrong with any of these charts. This one is up about 50% from the yearly intraday lows. Now, to kind of dive into this one, you can see that we had a longer-term upward trend line in blue that we still have held on to, but it's quite far below current prices. The more recent price action was a steep upward trend line in white there that we took us above our previous yearly highs here near early January. We topped out near 160 since that point. Now we're finding ourselves in a situation where we're above that 153.78, those old highs, and we're holding on to them as a supportive area here. Now this one, we're in a different situation with our moving averages. Price is above all three of our moving averages. All three of the moving averages are trending upward. It's looking like they were continuing to diverge farther apart, but we're slowing down a little bit here, as you can see from the RSI. We are trending downward here. We are seeing a little bit of bearish divergence here. Not really what you want to see if you're bullish here. RSI is declining while price is making new closing highs. But we are still in the bullish side of the camp. We're above the 50 midline, so perhaps just a little bit of a slowdown as we regroup for another push to the upside. Not saying that's going to happen, just saying that that could be one possible scenario that plays out here. So if we were to look to the downside here, we've got our old highs, then our 21-day EMA near 153. Beyond that, our post-gap lows here near 146, fairly close to our 63-day EMA. And then for the third time, the bulls would want to see a break above the highs.
All right, Rick Ducat, Jenny Horne, thank you both.